If you're new to investing, you've probably heard about index funds and mutual funds. But which one is actually better for beginners in 2026? Let's break it down in a very simple way. Mutual funds are professionally managed investments, where experts decide which stocks or bonds to buy. The goal is to beat the market, but this usually comes with higher fees. Index funds work differently. Instead of trying to beat the market, they simply track a market index, like the SP 500. Because of this, they usually have much lower costs and steady long-term performance. One of the biggest differences between these two options is fees. Higher fees in many mutual funds can slowly reduce your long-term returns, while lower-cost index funds keep more of your money invested for growth over long periods of time. Many actively managed mutual funds fail to beat simple index funds. That's why so many beginners choose index investing first. Mutual funds can still be useful in certain specialized strategies or markets where expert management may help, but for most beginners, simplicity and low cost usually win. So in 2026, starting with low-cost index funds is often the easiest and safest path to building long-term wealth. If you want more simple investing and money guides, subscribe to Grow Your Wealth and start building your financial future step by step.